And so I think a lot of macro indicators show that the 2020s are shaping up to be very similar. We already had this big spike here. We had the largest ever decoupling in terms of inflation and rates since the 1950s. And I think we're going to get probably more cycles of that going forward.
Welcome to Dream Richer. Where do you think our economy currently stands in terms of a possible recession? In fact, the Wall Street has seen a large conviction that we are all set to see recession this year. According to major banks, we will get a major recession sometime during 2022. The problem, according to the bank, is that while inflation may be peaking, it will take a long time before it gets back down to the Fed's goal of 2%. That suggests the central bank will raise interest rates so aggressively that it hurts the economy. It's highly likely that the Fed will have to step on the brakes even more firmly, and a deep recession will be needed to bring inflation to heel. Consumer prices spiked by 8.5% in March alone, the fastest pace in 40 years. The jobs market remains on fire, with Moody's Analytics projecting that the unemployment rate will soon fall to the lowest level since the early 1950s. Today, Michael Saylor and Alden Lyn support this theory, arguing that we are all set to see a drastic decoupling of the economy, where buyers will see their money lose purchasing power and the economy will back down to mirror that of the 1900s. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
When we take a bigger step back and look at the really high level view, though, we can see that even if Bitcoin has a choppy period for a year or more, the more structural outlook remains very good, and that's largely because one of its biggest competitors, what do you want to hold on your balance sheet, either as an insurance company, as a corporation, as as a hedge fund, as a retail investor, what do you want to have in your balance sheet? Right now, cash is a very expensive form of optionality. It obviously gives us volatility protection. We need it for our working capital. We need it for a variety of different purposes. But it's near the high end of how expensive it is in terms of losing purchasing power over time as you hold it. And so I think a lot of macro indicators show that the 2020s are shaping up to be very similar. We already had this big spike here. We had the largest ever decoupling in terms of inflation and rates since the 1950s. And I think we're going to get probably more cycles of that going forward. And so that's another good kind of, backdrop for having Bitcoin as a way to protect against that. It doesn't necessarily hedge you the moment you get different CPI prints, but it's basically a structural way of holding something that has intrinsic scarcity compared to something that is intrinsically not scarce, and that for which the yields are no longer keeping up with inflation. And there will be counter trends. I mean, even in the 40s and the 70s, you had these disinflationary periods.
In such a recession environment, only an asset that is intrinsically scarce can help you survive. In the words of Lyn, Alden, and Mr. Saylor, that one true safe haven is Bitcoin, unlike the dollar, which has never been scarce to begin with. There are only 21 million Bitcoins in circulation, and as Bitcoin supply is nearing its limit, we could see Bitcoin's scarcity skyrocket and hence its price. Other factors that will be affected once Bitcoin becomes more scarce includes miners will be dependent on transaction fees instead of block rewards, and the miners will start earning more out of the transactions that happen on these blockchains than from the mining itself. It is also worth noting that Bitcoin is not just a cryptocurrency, but a blockchain network that processes transactions on a distributed ledger framework. So the technology has far more use cases than just being a crypto asset.
And you have, as we look at kind of economic cycles, we see these periods of strengthening and softening. And so I think that as long as we manage our time frame expectations, that's what I do see, even though it won't be a straight lines. And luckily now, I mean, even though we're in some ways going through a similar macroeconomic cycle as the 40s, investors have more tools available to them, including Bitcoin, to protect their capital against these periods of currency devaluation that you can go through when you have that combination of high debt with some degree of inflation. And so of course, Bitcoin can be held multiple ways. Some people hold it on chain. Some people hold it on exchanges. Some people hold securities that are tied to Bitcoin in different ways. And this is looking at the very large snapshot of on chain, which is a very big part of the market still. And what you generally see is that during these major bull runs, all this new capital comes into the space, and some of those longer term holders start to sell into that strength. Basically, they experience 5x, 10x, 20x gains in some cases. They have these, they have these life-changing amounts of capital appreciation. They want to rebalance, they want to consume, and so they distribute into some of that strength, and a lot of that new capital pours in.
It's clear from Mr. Saylor and Lyn Alden's discussion that the currency is bound to see a major decoupling in the next few years, and the initial effects of such crash could begin from this year 2022. Why? Because the dollar, or any currency for that matter, is not scarce. Even though in the beginning gold was used to back up the currency and hence maintain its value. However, that concept has all been lost. The Feds are projected to print trillions of dollars of the next 5 years. As such, an asset that is scarce in value and is deemed property should be used. Do you agree with Lyn Alden that Bitcoin is the one? To learn more about the latest crypto news, watch these videos here.